The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. This is the 13th of November. My pleasure to be here Monday through Friday and market days. Oh, except I will not be here tomorrow. I'll be away. My opening call will go out as always, but I will not be doing my show. But today I will be doing 2 hours. I'll be doing Larry's show as well. So there's a lot of time to go through a lot of things. This is a pretty critical level. Why? Leg C in the E-minis, that's the S&P daily chart. But no. It's not exactly the same in the cash. The cash is in leg D, both in the Dow and the S&P. This is really interesting. 120-minute chart of the E-minis, the December E-mini shows that the high of 2,043.75 made a peak. See, there should be a squeak above that, and the stochastics at 82, turning down, but still at 82%. The MACD is good, not great, but good. And the 9-period moving average at 2,038 should be the support that we've got to watch on the shorter term. So let's go through all the different numbers. Thank you to John and Tom and Steve for some great hours before this. I'll try to do my best. Of course, I'm going to be staying here for Larry's show. Larry won't be doing his show today. And we've got programming all the way through until 6 o'clock. Just fabulous program here at TFNN. So let's go through these numbers. I'll do the charts. I'll do this in such a way that I'm covering a lot of ground, and I'm doing it for a very specific reason. I'm covering a lot of ground because whenever in the Chapman wave we get to the leg D in the Dow or the S&P or both, that's where other things could start to happen. And that's where we do a lot of studying of the technical, the charts, the different techniques, the technical tools that I use, the MACD, the slow stochastic, the 9-period exponential moving average, shorter term moving average if it crosses over the 9-period moving average, which it has done now for 3 out of the last 4 sessions. The weekly chart, what is the implication? Let's just go right through this from the very beginning. Right now, the Dow is at 17,674, having made a high today of 17,705. I discussed the whole 17,620s as being a very strong resistance area. It was a strong resistance area, but not the strong resistance area because we've snuck above that. This makes the implication of discussion that I had yesterday with John from Philly, who had called about a Chapman wave propeller shaft possibility. It means that is now activated as a technical tool that might be applicable, and we'll see what formulates as the Dow sometime between right now and next week starts to consolidate from this huge move from 15,855 to 17,705. That's 1,200 points. Fantastic. Just a huge move. Now, let me do this. The weekly chart of the Dow is broken above the inside track resistance area of this rising wedge formation. And in fact, if on Friday, tomorrow afternoon, the Dow closes above 17,560, that's about 100 points if there's a slide from here, that would be very important to monitor because it's starting to give us a tremendous amount of information about what can be expected in November and even December. If, in fact, we close even higher than this and we close close to the 17,720 area or higher, that has another implication. So let's just do this. Short term, 17,503 would be the key support of the 9-period moving average. And I would say it's very difficult now to gauge upside resistance because we don't have any history of resistance. This is all new territory. I would just say that based on the chart formations that I'm looking at, based on the 120-minute chart, there is, and this is just unbelievable, there is a chance that this, in fact, turns out to be an F instead of a brand new A in the 120-minute chart. This is like the weekly chart. A little breakout says, a little breakout, what's the big deal? The big deal is in the notation. So I'm not going to even mention right now what I anticipate. I'd rather just say that a close, once again, I'm going to say a close into the 17,720s today or tomorrow would imply that there are going to be further gains to be made. Now, I suspect there are going to be further gains to be made, and the 120-minute chart is just I don't know if any of you have ever used this, but if you have been using it, the 120-minute chart, in fact, produces just a wonderful opportunity to have swing trades that last from 5 to 7 sessions. So with that in mind, let me just tell you, the Dow's at 59 at 17,671. The S&P is up 2 3/4 at 2,040. The composite index is up 10 at 4684. Gold is working quite hard here. It's up 3 at 1162. My guess, and this is just a guess, is that the dollar, I'll show you the dollar chart right now. The dollar is in a sideways consolidation. And the result of the sideways consolidation invariably is, based on the 120-minute, you go to the shorter time frame to see if you can get a Chapman wave buy mode within that. And I suspect from the pattern I'm looking at that the dollar is probably going to test the 87.40 to 87.13 lower levels before it breaks out to a new high above 86.19, and that's going to help the gold contract. I don't think the gold contract is in for a whopping move, but it certainly could have a really nice bounce if that's the case. So let's continue. You've got high-grade copper. Now, this is going to be very interesting. High-grade copper, look, early this morning, that was great. It was up there. It was a beautiful green candle up at the 3.0525 level on the continuous contract. Now it's only... It's unch at 3.025. That's a disappointment because it's going to also form the same kind of chart pattern. Sideways consolidation, nothing much here. So I'm watching this really closely because the whole metals, it's part of the metals, it's part of, what should I say, the CRB factor, the commodities factor. And, there's been a commodity bear market that's been unfolding, and the equities have been the place to be. So we'll see exactly what's going to happen. It's a very important period. And we've got, this is the TLT, sideways, same things going on in the TLT, just a sideways action, not breaking down, not breaking up. It's just in this kind of holding pattern. And I think it's going to be in a holding pattern for a little while longer. Why? Because the Fed wants to keep the rates low. They can only control so much. They've lost control of the dollar. Right now, maybe they're gaining a little bit more back into the dollar, a little control, that is. Let's see what happens. And crude oil, you have your deflationary aspect. Crude oil is down. It's down $1.80 at 75. Let's go to Victor in Paramus, New Jersey. Victor, how are you?
Good, how you doing? What's going on with UNG? Is that like a V formation? Is that going up or down? It looks like it's going one way or the other with the cold front coming in for the next week.
Now, okay, UNG is the United States Natural Gas Fund. It's trading at 21.74. It's down 5 cents. It used to be just a terrible ETF to be trading natural gas. Now it's very much closer. It does a pretty darn good job as one of your only means of trade.
Everybody lost their money with it. They did a 4-for-1 split.
Yeah, well, it's very interesting. Almost all of these
the same
ETFs.
Price it was 2 years ago when it split.
So all of these ETFs. I'll never forget back in one of the days when I was having a Master Trader series after we used to always meet every year down in Florida, one of our big TFNN meetings. I had in my Master Trader series that I held at the same time, I had someone who was a trader at Goldman Sachs. He and a friend. used to trade together at Goldman, and there's a whole bunch of things I don't want to get into other than that he was told that he could trade a particular account that was part of Goldman Sachs, but it was almost an independent thing that they could trade. The benefit would go to Goldman Sachs, and if there were losses, it would also go to Goldman Sachs. Well, they had shorted all the banks at that particular time, and he got called in and said, "Hey, we're just going through your account. What are you shorting the banks for? Well, our clients are long." And they said, "Well, that's what we see." And anyway, he was in my Master Trader series, and he said, "You know what? We both quit at that particular point." And my friend said, "I'm going to short every one of the ETFs, whether they are long ETFs or they are short ETFs, because of the makeup." And you know what? They almost all went down, the longs and the shorts. Look, this particular ETF was once upon a time, back in 2008, July, it was at 511.12. If you had shorted it, you could just sit with this thing, and it went all the way down to 8, was it 8? It went down to 4, went down to 14.
43.
Right, and
The UNG.
And they get split, and now it's at 21. So
Is that the same price it split at? 21.83 on February 22nd, 2012. 21.83. So it hasn't gone nowhere. So
That's
what do you
right.
think of this thing? Is it going anywhere with the cold front, or is it scam account?
Okay, so now let's do two things. One is we're going to look at it completely fresh. That's number one. And number two is we're going to just forget for a moment that it gets reconfigured at the end of every day, and we're just going to treat it as if it was a price chart that we needed to analyze. One of the reasons is I'm going to pick up the NG chart, which is the continuous contract of natural gas, and you will see it virtually mirrors the patterns that we're looking at now. So here's the 200-period exponential moving average in the natural gas contract, right at 4.1125, and the price right now is 4.141. Now, let me just quickly ask you: Are you in this at all?
No, well, I was waiting today because the gas report comes out at 10:30, and I didn't see it. It looks like it's inching up a little, so I don't know. I know you got cold for the next week all over the United States, but they might have factored that in today. I don't know what the withdrawal was.
Let me just tell you, one of the few stocks that we've had a loss in over the last couple of weeks, we've had very few, we've had some very nice gains in my opening call, is a coal stock. And everything about it said that we should be able to have a fabulous move up in this coal stock. Well, through a little fussiness of my part, technically we missed it, but some subscribers got it, and it just shot up in one day. And then I officially went into it, and we took a small percentage loss, but it was a loss nevertheless. And the darn thing pulled back, and it's still, let me just check to see where it is still.
What do you
not
buy? BTU?
What?
What was it, BTU?
No, it's ACI, Arch Coal. And right now it's still sitting at 242. It did not move based on this very cold front, and it should have participated. This was its absolute perfect opportunity to have a pretty decent move, and it did a single move, and then I drew out the map of it and everything. It followed the map to the exact penny, but it was peak C, and I thought it should go to a peak D. So far it's pulled back, and it hasn't gone to the
give
D.
me UNG when we get back, and KOL, coal. It mirrors it too.
I will do both of them, UNG, because this is a good season to be looking at it. So can you hold on?
Sure.
All right. We'll look at it as soon as we get back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back, and we're back with Victor in Paramus, New Jersey, and it's very appropriate right now that we look at the UNG, which is natural gas. We look at natural gas itself, and we look at coal. KOL is the symbol for the ETF, the Coal Market Vectors ETF. So let me just do this. If you have no position at all, this is obviously the season, if ever there was a season, for the UNG to be moving higher. I've got I'm in two minds about it in terms of the actual entry price. One is there's no problem if natural gas is going to become viable over the next month or two, and this is the season that it should actually be rallying, to just nibble at a position. In other words, you just have a starter position here, and you wait for either 2104, which is a 200-period exponential moving average support in the 120-minute chart, to be hit, and that's either where you add to your position or you start a position, and you don't have a stop in per se. But you keep in mind that if it was to break under 20.25 or 20, that's really very negative action. I even say 20.60 is very negative action. But the chances are that we've started a move in the weekly chart, well, precipitated in the daily chart, that says it should be going higher. It doesn't tell you how high. My monthly chart is the one that has got me a little concerned in that it keeps making an arch formation. The best thing about it is making it higher highs and higher lows. That's why this is exactly the moment where within a point well, I wouldn't even say a point. I would say within 80 cents, UNG needs to move very quickly above the daily 22.11 200-period moving average and start a move that takes it to leg C, which would be above 23.49. So my one way of looking at it is if this is something that you follow closely, your belief is that natural gas should be moving higher in this time frame from now into midwinter, say into January or even February, then this is the time just to at least start a position. If you start a position and it gets to 22.70 or somewhere around there, and then it pulls back, but it just doesn't pull back below 22. It just keeps making higher highs and higher lows from here. Then you're in the right position and you can add to it. But what I want to say to you is the other way is just to say, you know what, if it goes a little higher, I can go in because it's making that U-shaped pattern, and that's a positive. But if it starts to break down, there's no telling whether or not it's become a player at all. So I don't want to give it more than, as I said before, like an 80 cent or $1 of room. But if you waited to get it at the lower level of 21.04, I think that that's the one that should hold a 1-point stop and start to move higher. If it's going to move at all, that would be the lowest level that I'd be looking at it, because if it broke under 20.70, 20.50, wow, that would be not good action at all. So I hope in that regard to the the UNG position, that's something that helps you. But if you want to look at coal, I'll do that right now because this is the season for looking at it. The daily KOL has gone, it's at 16.72, down 12 cents. Went to a peak E in the daily chart and is pulling back. It got repelled at the 200-period moving, the 9-period moving average resistance in the weekly chart, and that says that it should hold 16.50. 1650 to 1640 on any pullback. Most importantly, the monthly chart is just horrible. I mean, this is where when an administration has the power to clobber anything, and they've clobbered this coal area. So I'm not sure. I'd rather be looking at UNG, which has a lot more upside potential politically than coal. But on a purely chart basis, if KOL holds the 1650, 1640 support over the next 3 to 4 sessions, trades towards the 17 level, I'd say that that's going to be in play as well. But I think the better position, as I say, more politically, is to go for the natural gas. So I hope that helps you. So that's Victor in Paramus. Victor, I hope that we got a lot of information there. And I want to do that because it kind of fits into the cyclical work. This is obviously going into the winter time. We'll be looking at that. Now, let's go on. So we've got the Dow. I spoke about the Dow. I'm going to jump to the VIX index. Why? Because the VIX index is under the 9-period moving average. It's stayed there since it broke down soon after that island reversal after the peak F, Chapman wave 3106. Island reversal top. That was October the 15th. The weekly chart has gone way below the 200-period moving average. The same thing in the monthly. So what it's saying right now is unless we're starting to get really bad news which impacts the market negatively, that's the only way I can see it, that the VIX index could get back to the 17, 18 level, which says, hey, I'm back alive again, rather than showing intense buying pressure. I'll be back. The Dow's at 51, S&P's up 2. Basil Chapman, Tiger Technicians out. We're going to go through all the indices when I get back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. We're back, and so let's go continue. Now, I was talking about the volatility index, and the question of the debt was, what was the question? Actually, Fletcher's a great one. He says, just wake up every morning and buy Apple. Seems like a plan. If you've done that, that would be a great plan. The question was, Basil, how can we know what news will be? I was surprised by the VIX slam that started 3 weeks ago. Well, we don't know. Let me put it this way. In terms of the economy at this particular point, we don't really know what's going to be coming out, because the jobs reports have been better. A whole bunch of things have been quite good. Now, remember, markets very often over the history of markets start to turn down when there's only good news. You remember March of 2000, January of 2000 with the Dow? There was no news, and the Dow turned down right at that moment. That was the high. So, and there was really good news coming out. So I'm looking at this and I'm saying, I'm suspecting that it's some extraneous event, some external factor that maybe makes the market nervous. And look what we've already got. We've got the Dow, INDU, the Dow making leg D. That means the next lower high bar will be a peak D. And at peak D, you start to think that, hey, maybe this is the moment. But because the technicals are so strong, I just don't think it's right now. I think we've got another couple of days to go before we've got to consider that there's going to be a sharper pullback. Not only that, you've got the XLF, which is in leg B, made a peak B. It should go to a C and a D. You've got the... just want to check. The semiconductors was at D. Yep, semiconductors went to a D. It snuck to, so SMHs are 52.26 high on the 6th of November, 52.25, 1 penny lower on the 11th, and now today we've gone to 52.29. That's an E, and that's saying, especially with the chart pattern that's unfolding here, that there's a good chance that these semis are getting kind of toppy. Now, it's fascinating. The story I heard is that, and it's just anecdotal and could be just purely one or two or three different aspects, but that orders suddenly were fantastic, and then suddenly in September, they just faded. So that's for chips and other things that relate to the semiconductors. So I'm looking at this and saying, gee, is that a potential double top? Is that something I've got to be concerned about? Well, to tell you the truth, all I can say is that the MACD is still very good and the stochastic still at 87%. So if the technicals pull back without the SMHs actually pulling back more than from 51.86 to maybe 51.13, but they don't break 50.70, what was the gap up high? It was Intel, right? 50.97. They don't break the 50.97 gap up low bar at this particular time, then we could get a higher level consolidation and maybe a couple of more spikes slightly higher. But the weekly chart has the left side high of 52.68, made the week of the 19th of September. That's the V-shaped pattern we're looking at. And the market vector semiconductor ETF. I had a question yesterday about propeller shafts. A technique that I developed way back when I used to hand chart. Well, look at this. In the market vectors, you've gone from the low bar of 30, round number 30, in November of 2012 to peak D high of 41.40. So let's call that, just for argument's sake, let's call that 11 points, right? So that's 6 points higher. So that's 11 points, and you go to the low of 40.08 plus 11 would be, or 11.50, let's call it, would be 41, say call it 41.50. Well, we did that expansion. We went right to, did I say 41? I mean 51.50. We went right to 52.68. So that's pretty close from a one-to-one to that little pattern that I call there, that little sideways consolidation, Chapman wave, propeller shaft expansion. We saw the same thing in the NDX. So what I'm looking at here is that perhaps on a shorter-term basis, the semis are getting a little bit higher. XLK, another one, has only gone to a peak B, had gone to a peak B, 40.99 to 40.99. This is still leg B. And that really is suggesting that even though we get these intraday spikes and pullbacks, that there's just enough residual strength to try to stay in this inside track resistance zone of the up channel of the S&P Select S&P Technology Spider Fund. And with a very strong resistance area of 41.80, and it's at 41.25 right now in leg B. Stochastics at 97%. MACD is still good. This should go higher, and I suspect that it's going to do that probably next week. When I'm looking at the QQQ series, related also to the XLK, because there are so many high techs in the QQQ series, we've gone to a leg D. We're at the low of the day. MACD is good. Stochastic is very good. On balance, volume is suggesting that the high that we make in the QQQ series in this particular phase, within another couple of days, if that's going to be the turnaround, the pullback could be sudden and quite swift and quite sharp in the QQQ series. Hey, we don't know whether that's going to happen. But what we've got here is, look, the Chapman wave stalk leg formation. Here's the leg, LEG. Here's the body. There's the oval formation, beautiful oval formation, B-O-D-Y. That's the body. Here's the neck, N-E-C-K, of course, capitals, N-E-C-K. And that's suggesting that there could be higher highs, but that when we make the neck, when the neck concludes with the head formation and the beak comes down, that could test the 102.03 level, and it's at 102.64. That's going to be key, because a breakdown below 101.67 would be very negative, and say you could go even deeper. So I'm looking at this, and there's really a very good chance that we go to an E, maybe even an F in the QQQ series, if we don't break down right from here, and I don't think we're going to. So that's the QQQ series. Now I want you to go through the gold chart. Why? Because gold is acting just okay, considering how much it got smashed to the downside, but it hasn't yet given any indication that it wants to go with the technicals, which are improving, and that spike to the upside would be very sudden if it comes about. And I haven't got a leg A yet. This is not an A, because the low bar cannot be the high bar unless it's an instant restart, or an instant restart to the downside. So in this particular case, what we've got here in the gold index is that there needs to be a new leg A, but you need to wait for 1180 or higher, a close above 1180 or higher, to say, aha, now we've got the turnaround, that pattern that we love to look at, which is the cup formation, and that can give you a left side, right side price projection to the upside, but we can't do that until we've got a confirmation. The 120-minute chart is just merely the sideways action. We saw it in copper. We've seen it in crude oil. It's just sideways, and we need to see a break to the upside rather than the downside for a change in trend. And if we go to the dollar DXY, you'll see the dollar's holding well. Stochastics at 83, MACD is starting to turn down, well, flatten out, but it's still very strong. The RSI is lower, and if you look at, let me go to the UUP, which I haven't done in ages. UUP should be right here. UUP, yeah. The UUP is A, B. Oh, that's only gone to a C. That's interesting, isn't it? Oh, wait a minute. Yep, I have to consider that that's an A, that is a B, and that is a C. Huh. Well, that says that maybe the dollar could just rally a little bit more to go above. UUP high of 23.42. UUP is, in fact, the DB US dollar bull. Oh, we've got to watch this really closely. Now, a couple of things are going on. In having made leg D in the Dow, but not the diamonds. The diamonds, yep, leg D in the diamonds, leg D in the SPY. He says right from this moment on, we'll be a little bit cautious for two reasons. One is, at D is where you can very often get your deepest and longest correction to the downside, that would be. But if all the technicals are holding very well, there should just be a minor pullback in the SPY from 203.81 to around about 202.66, maybe 201.34. But I have got, this is something that I spoke about yesterday, and I mentioned it to my subscribers, to my opening call, that we've got to be at least aware that that little thin line there is crossed above the 9-period exponential moving average, and that says at this particular point the upside is a little bit limited, and you've got to be somewhat careful. So that's the case there. Now, what I want you to do is, look, let me show you the New York Stock Exchange, NYA. I will be doing Larry's show, so because I'm doing Larry's show, I'll use that particular time to look at many of the commodities. I think that's appropriate, especially being Thursday. Wow, look at that. The New York Stock Exchange went to a high of 10,911.88 on the 11th. 1188. Today's high was 10,911.89. Now, for those of you who have used the Chapman wave methodology for a long time, I keep getting asked by people, how on earth does that happen? How does it actually fulfill when you're talking about something that has a price of 10,980? How can it go 1 penny higher to get you to that requisite in the Chapman wave leg D? And the answer is really very simple. I have no clue. I've just done it on, I'd said maybe 4 years ago, it feels like I've done 1 million charts since the 1980s. Even 1 minute charts, if I add them all up, I don't know how many charts I've gotten to at least a D. I don't understand it. I don't know what it is. I actually have in the back of my mind, and occasionally I'll discuss some part of it, a theory, but I have no idea how you'd even prove the theory. And the theory is really in quadrants. We can think in quadrants, but to get you at least to D, but it goes to an E sometimes, an F, even a G. I don't understand quite the machination, but it is amazing how that happens. So here we are. We've got a number of our little ducks sitting there waiting, and they are in leg D. But look, if you go to the, I wonder if the SDS is, I can do that, not the SDS, I want to do the SH. That's the 1-to-1. I don't want to go to the long side. Why am I doing that? Give me 1 second to think about this. You know what? I'm not going to bother about it. Oh, yes, the DXD to the downside. Look at the DXD. This is the 200% short. No, I may as well go to the dog. Oh, I know what I want to do. That's exactly it. Look at this. Grab this chart right here. I want to show you something. Mirror images. In your trading, if you're able to think, and this is what I like to do in my courses when I teach my courses, I like to show that you can have mirror images. And some of you are really good. I've noticed that. Some of you are really good at the long side of trades. Some of you are very good at shorts. I don't even know how you get those shorts sometimes, but you're very good. Well, if you're very good at one particular aspect and kind of okay at the other, then use it. Look, if you're using the Chapman wave here, you would have gone in the DOG, which is 1-to-1, the ProShares Trust Short Dow 30, 1-to-1. It went to peak A, B, C, D. Plop. This went to trough A, B, C, D. Boom. You're ready to the upside. So learn how to use these as mirror images, and if you favor one, then you can see in this particular instance what I would normally do. I would draw something like this. I'd say, hey, wait a minute. There's a chance that you're starting to make some kind of a cup formation. There's the left side, the ellipse or whatever it is on the left side. And there's there's the arch formation. And at some point you'll move away from this. Is it going to be now? Is it going to be next week? I think it's next week. I think these selling levels are just for the folks, the big fund managers who managed to miss this move and say, oh, man, I'm going to use any pullback. Let's get a pullback here. And they wait for the pullback, and they're going to start to buy a little bit. That's just my impression, and it should go into next week. So I wanted to show you how you can use mirror images, the inflection point. Now I want to look at the IWM. The IWM is the Russell 2000 ETF, the iShares, and they've gone to leg D as well. Little red candle there. Oh, I want to talk about candles. I'm going to talk about that in a moment. So now you've got a brand new A, a gray A in the weekly chart, and the technicals, oh man, are they going to produce a squash Wow. All right. So we'll come back with the IWM if I haven't moved 6 or 7 stages away during the break as I look at different charts. I'll be back. Basil Chapman, Tiger Technicians Hour.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Hi, folks, we're back. So I just want to tell my subscribers that I for some reason, I blipped out one of the very important stocks that I had put on, and I had a whole story about them in the charts that I showed, and then in the actual Traders Corner. I'm not sure what happened. So the stop is the same stop as we had from yesterday. That's the most important thing you got to remember. And it's an experiment, because if this one actually works, it's really good. I'm not sure it's going to. It's a tough call. We'll see. Now, I wanted to also mention orchestra news. You know, over the years, I'm still a member of the Musicians Union, not an active member, but a member nevertheless. And I get the news magazine. So for years, it had all the stuff about orchestras failing, blah, blah, blah. It was really sad. I mean, musicians, when you think about it, these are people that spend years and years, 8 hours a day, 10 hours a day, practicing work. It's a tough business. You're on the spot. To be the principal of an orchestra is like being the CEO of a major company, and yet you get paid, unless you're the Boston Symphony Orchestra, you get really paid quite poorly. So it says here, orchestra news. Atlanta Symphony Orchestra president resigns, lockout continues, and now they've got an interim retired Coca-Cola company executive as the current appointed interim president. But then it says Charlotte Symphony Orchestra achieves a surplus. Then it says Nashville Symphony Orchestra to receive raises. Chicago Symphony continues record-breaking trend. 22.4 million in sales, revenue total 57 million. Lexington Philharmonic ratifies a new contract. Grand Rapids Symphony receives $1 million gift. I mean, that's fantastic. Good. So, and what I love about this union paper is that they're always grumbling about capitalism and all that. It's capitalism that keeps the orchestras going. So that's the way it is there. So now let's go back to our story here. The IWM Leg D, but a massive move in the weekly. So next week, we're going to be discussing weekly charts, and we'll be going to not only be discussing the weekly charts, but we'll be looking at what constitutes a breakdown and what constitutes a brand new leg A in the weekly chart. So before we go to a break, and then I come back and do Larry's show, let me just do two things here. One is, had a quick question about Baba, round number high, it said round number high, Baba, oh, B-A-B-A, I thought that wasn't the chart. Yeah, leg D, right there, and the high today is 120, round number high in leg D. But the MACD is still good, and the stochastics at 90%. So let's see if Alibaba Group Holdings Limited came out as an IPO just a month or so ago, 2 months ago, and in September had a high of, came out at 92.70, went to 89.95. Today it's trading at 120, round number high. Leg A in the monthly, of course, that's an IPO, and leg A in the weekly. Getting ready for a bit of a pullback. Yep, I'll be watching that real closely. We missed it by a few cents. Never jumped on board. It's one of those, once you get the sexy stock like a Tesla or something, and it's skyrocketing, you close your eyes, you hold your nose, you jump on board, and that's it. You put in your stop, and you say, take me out, because I'm with you for the ride. That's the way to play these things. Now, it's a little bit of a different story. So let me do this as we're about to go to the break. For those of you only listening for this hour instead of listening for the next hour, I will not be here tomorrow, so this is kind of comprehensive look. The Dow needs to hold INDU. The Dow is in leg D. The Dow breaks down on a very short-term basis. If it closes under 17,500, I shouldn't say it breaks down. It starts to consolidate underneath 17,500, but 17,374 will really be a critical level on the shorter term. The weekly chart has 17,000. A close under 17,000 says watch out. If it does that for 2 out of 3 weeks, that's going to be negative. The upside looks fairly limited into the 17,700s right at this time. My assessment is there's a good chance that we're going to roll into a couple of just nominally new highs next week. Next week we get some kind of a short-term top. I'll be back for the next hour. Basil Chapman, Tiger Technicians Hour, signing off on this 14th of November.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.